with apexinvesting.com, and appreciate you guys taking your time out of your trading day today to join us. And we're going to talk today a little bit about live directional trading with stock indices. And David says, yeah, crazy day for trading. Yep, you're not sure what to expect today with the election going on. Didn't know if we were going to have some volatility, some chops, some nothingness or craziness. And we chopped around a little bit this morning, and now the markets have popped up a little bit. And so we want to take a look at a couple things here. And you know, something I've seen a lot of is some traders have a really great strategy or system when it comes to trading the stock indices with Nadex, but they're not always sure about the best option to choose from. So I am going to talk briefly about a couple different strategies and trade setups here, but we're going to focus a lot on choosing the right option. So let's jump right in. We've got some limited time here. Let's knock out our disclosures. Trading futures, options, or any financial instrument involves risk, may not be suitable for every investor. And let's see here. Information presented in this webinar is for informational purposes only, and not an offer or solicitation of an offer to buy or sell any particular financial instrument offered by Nadex. Past performance not indicative of future results. So if you're brand new to Nadex, hop on over to nadex.com and check it out. You can go through the tabs there and get some information about what all Nadex offers. They'll also give you a free $25,000 demo account. Definitely take advantage of that. So you can test out the platform, test out some strategies and systems. And then hop on over and check us out over at apexinvesting.com. Apex and Nadex, two complete separate different companies. Nadex is an exchange. Apex, we're an online company of traders helping traders. We've got over 20,000 members. We've got indicators, strategies, systems, a lot of training. We're traders just like you. And we're a Nadex education partner. We do these webinars for Nadex each and every week. Focus a lot on risk management and probability. That's why we love the Nadex Capture Risk products. I've been with Apex now for about 3 years as head of operations. I have a background in banking and as a stockbroker. I'm an educator, but I'm a trader just like you. I trade Nadex binaries and spreads on a daily basis. Love trading them. So we're just here to give you some free education about who is Nadex, how to trade their products, how to understand them a little better. I want to talk today about the stock indices. All right, Nadex offers binaries and spreads on 4 U.S. stock indices as well as some international stock indices. We'll talk a little bit about trading them directionally, reading the markets, making sure you're aware of news, and understanding spread and binary premium and pricing. Okay, and so we want to talk a little bit about some trade setups and comparing your different options and managing some trades. So let's take a look at some markets here, and I'm going to pull up real quick here. I just want to show you. Now when it comes to directionally trading, there's so many different ways you can do it, so many different strategies and systems out there, and we've got many different ones over at Apex that we use, but I just want to talk about one particular one and give you an example. It's becoming pretty popular strategy and system that we're looking at. If you were with us last week, and I'm going to show you where you can go back and take a peek at last week's webinar recording, so I'm not going to spend a ton of time on it today. But if you notice on my basic chart here, I've got these tick bars here. These are not time-based bars. These are not minute bars. These are tick bars. Okay, you notice here these are 10 tick bars. You also see these lines on my chart that say +1 or +1.5, and if I squeeze it in, you'll see some more. These are deviation levels. This shows you kind of the settlement, where did the market settle, and then deviation levels. And I explained deviation levels last week. You know, these are kind of expected moves of the market. These are very strong levels. The markets, you know, respect these levels quite a bit. And again, I'll show you where you can get some more information on that. And I talked to you about this indicator here you see on the chart. It's called the volume accumulation distribution. A lot of you are familiar with volume indicator, all right, but this is a little bit different. This does not measure the volume within a bar itself. This indicator measures the volume within a trend, okay? And it'll all piece together if you watched last week's webinar. And one of the directional trade setups that I look for on stock indices is, and let's just go to yesterday as an example here. All right, notice right here as the market opened around 9:30, what I'm looking for is a breakout trade here. Okay, and I'm looking for breakouts at strong levels. And notice right here around opening, we had some chop. Okay, so I'm looking for a little bit of chop around one of these strong levels, and then I'm looking for a breakout. And just as a quick example here, yesterday, you can kind of see that, right before opening and then right into opening, the market was kind of chopping in this area here. You kind of had a low here and a high here. Just as an example, if we drew just a quick box, okay, kind of a chop box there, all right? So if we were trading live at this time, that's kind of the box we'd be looking at. And notice as the market made a high right here on this box, there was that level of accumulated volume in that trend. And then notice as it broke through this chop box, how much more volume it had right here. And then as we see, the market just shot on up. Okay, another quick example just from yesterday. Again, right here, we're kind of chopping around this level here. Had some decent volume in this portion here, but then as the market started to pop up, we see this volume increasing here. Okay, even right here, we've got a little bit of a chop area with some low volume, and then as it kind of breaks out of this, some extra volume. All right, and you can check this out over. I'll show you where to get some more information about that. I don't want to spend too much time on it, but that is one of the directional trade setups that I look for when it comes to the stock indices. All right, so if we look at where we currently are today, we had some choppiness this morning, and as we see, the market broke pretty high. And right now, we see we're right up here, just above settlement, and we're looking at a chart of the NQ, which is the Nasdaq or the US Tech 100 on Nadex. So currently, we don't have an actual trade set up right now currently. Let me just go ahead and add our current price in here just to make it clear exactly where we are. So we don't have a live trade set up for that particular setup that I just told you about, okay? But let's just say we did, all right? Because like I said, a lot of you have good strategies, good systems, but sometimes you're not exactly sure, hey, what option should I go for? So you understand the trade setups I'm looking for, but right now we don't have one of those setting up for us. But let's just say as an example, let's kind of make believe here for a moment that we did. All right, let's say that right here we were at a strong level. We were showing a breakout here of this level. And what do we want to do? All right, what do we want to do? Well, I know a lot of people that say, well, yeah, I trade Nadex, but I only trade binaries. Or some people say, well, I only trade spreads. Well, personally, I like to say that I trade Nadex. Okay, I'm not looking at just binaries or just spreads. I trade Nadex. And I'm looking at my different options to choose the best potential one. Is a binary better for me? Is a spread better for me? Okay, and I have to really look at the markets and look at the options here. So let's just say, for example, that we had a setup here and the market was breaking out. Okay, let's just say that, for example, this right here was our box. Okay, and let's just say that the market was breaking higher potentially here. Okay, well, let's let me see here. What do we got? Let's just look at it. Let's just say, okay, the market's made a pretty big move up here already, right? So is it going to keep going? Well, we don't know, right? So what we're looking at here is, all right, let's say we had a setup, let's say we had a chop, and we're breaking out a chop. So what are my options here? Well, first of all, what I need to look at is, what are my expectations of the market? Okay, do I think the market's going to move a lot? Do I think it's going to move a little? What are my options here? Okay, because let's just say that I was looking at a binary. Well, we know that a binary is what? Binary is capped at $100, right? So if there's a big move, I could possibly make more on a spread, right? If it's a larger spread and we've got a large move of the market, maybe I can make more on a spread. So which one am I going to do here? All right, am I going to look at binaries or spreads? Okay, well, let's take a look here. Let's say that I wanted to look at binary options, right? So, okay, so let's say that I want to give myself enough time to be right. So I wanted to take a look at some binary options. So I pop over here to the US Tech 100 and I want to look at binaries that are available here. Well, I've got expirations at 12 p.m. and at 1 p.m. But let's say I'm not sure if the market's going to hesitate here for a little while and I want to give myself time to be right. So let's say I want to look at the dailies, for example. Okay? And if you're on the Nadex platform here and you're looking at the daily binaries, something you can do here that's really handy, if you click this arrow here, you can pull up right here binary ladder chart. Okay? And let's just give this a second to pull up here. All right. It's a much better visual for you when you're looking here at your different options. Let me just pop this open. Okay. Let's get a little bit bigger chart here. It's helpful to see this binary ladder on the Nadex platform. I mean, you can see the different options available to you, but when you're looking at the actual binary chart, it definitely gives you a really good visual here. All right, so you can see where you're at, and you can see what options are available to you right here. Okay, and you kind of see them right on the chart. So let's see here, and let me just kind of take this over here and move this over so we can look at both at the same time. Just give that a second there. Okay, just give that a second to populate and it'll stop doing that. All right, so I'm looking here and I can see my options. Now, I've got some different options here. If I think the market's still going long, okay, well, how much further do I really think the market's going to go? Okay, because let's take a look over here. I've got this option here as a buy, right? And I can buy it for $19. All right, that's an out-of-the-money binary. Okay, well, what do we know about out-of-the-money binaries? Well, we know that if I were to buy this, okay, and let's just click on this real quick here. If I was to buy an out-of-the-money binary, what am I risking here? What can I buy it for? $18.75, right? Okay, so I've got a very low risk there, right? Okay, but where does the market have to move to? 48.12, all right? And right now we're at what? 47.92, okay? So do I think the market's going to move that far? Okay, I like the fact that I only have to risk $18 and potentially make, you know, $82. I like that. But do I really think the market's going to move that much further? Okay, what are some of my other options? Well, right here, I've got a 47.88, okay, that I can get for $62. So as long as the market stays above 47.88, all right, then that will expire in the money. Well, where's the market at right now? It's at 47.93. So it's already above 47.88, isn't it? So as long as the market keeps going up, or if the market stays where it is, or even if the market comes down just a little bit, as long as it doesn't come down to 47.88, then that strike would expire in the money, right? Well, but what if I'm not sure exactly what it's going to do? Is it going to hesitate here just a little bit? You know, would I perhaps want something a little further down? Something that gives me a little bit more insurance, a little bit more room, just in case the market doesn't move a whole lot? Well, what are my other option here? Well, I can buy this one at 92. Okay. So, all right, if I'm looking here at 92, okay, well, now that one's moved there, right? Let's see here. I've got this option here, now it's at 81. So what I have to look at here is, what is my expected move of the market? What is my risk to reward here? Okay, yes, I like the $18 risk, but am I really confident the market's going to move up that much? Or do I prefer to have a little bit of insurance here and get a strike a little bit lower that gives me some insurance? Yes, I've got to put up a little more for it. I've got to put up $80 for a potential $20 risk, okay? But which one is more important to me there? Okay, which one do I like better? Okay, now let me just move this over real quick here. Give me 1 second. Let's take a look at one other option here. Yeah, I can move that up. Hold on. All right, so that's our dailies there, right? We're looking at all the dailies. Well, we've actually got quite a few more dailies. Let me open this chart up a little more for you here. Hold on 1 second. All right. Just 1 second, guys. I'm locking up a little bit here. Okay, now let's say that, all right, let me take a look at what I have a little closer to where we are now. Let's pop open for the 1 p.m.s. So we know what our dailies options are here. What do we have here expiring a little bit quicker? Okay, so with the 1 p.m. expiration, and note that the markets have moved up quite a bit here. Okay, so some of our strikes here are not showing for us a bid and an offer. Okay, we don't have a bid and offer on both of them right now currently. On some of these, just give me 1 second here. All right, these aren't popping up for me here. Okay, so what we're looking at here is on the 1 p.m. and I'm going to come in just a little bit here. I don't want to do an hour chart. Let's do a 5-minute chart here. There we go. Okay, so what we're looking at here on a 5-minute chart, we see a few more options here, right? Let's get back over here. Okay, so we've got right now, we're at 47.91, okay, and we've got, hold on guys, I'm sorry, there we go, 47.91. Now we've got a lot more options to look at here, okay, so now I can say, all right, I've got a $30 buy here at 47.97, but I've only got an hour and 11 minutes. And what I see right here is the market starting to hesitate. So how confident am I that the market's going to get up to here within an hour and 10 minutes? Well, I've got a $30 risk. Okay, I like my risk to reward there, $30 risk for a potential $70 reward. I like that. But what is the probability of that happening? Do I really feel confident that the market's going to get there as I'm seeing it hesitant here? Right? I might not be quite so confident in that. But again, I've got my 47.89 here. So that gives me some insurance. That gives me some room, right? I can have a $70 risk for a potential $30 reward. So if the market just hesitates here for the next hour and 10 minutes, as long as I'm still above 47.89, I still can expire in the money there, right? Now, if I want to go even more and have even more insurance, I could go down here a little further to 47.85, but then I've got an $85 risk there for a potential $15 reward. That might be a little too much for me. I might not quite like that particular risk to reward ratio there, right? So something I've seen, like I said, I've seen a lot of people overall have a pretty good strategy or system, but sometimes they choose the wrong binary. For example, they'll say, hey, the market is going up, so that means I need to buy, correct? So they'll just automatically buy the cheapest thing they can find. Okay, and then they wonder, hey, the market was going up, why did this not expire profitable in the money? All right, well, as you see here, maybe the market is going up, maybe you did choose the direction properly and therefore you bought, but did the market make it all the way up to your strike price by expiration? Okay, So something you got to look at when you're looking at these out of the monies is, will the market get there in time? Do I think the market will move that much by that time? Okay, and that's one of the biggest things that, and as we see here, it is headed up. And that's one of the biggest things that I've seen is, hey, you choose the direction properly, but did you choose the right binary? All right, what is your strategy or system telling you? What is your charts and indicators telling you as far as, will the market get there in time? Because your risk to reward might be much better with an out of the money, okay? But if you have something a little further down, you had some insurance, you had some room, okay? So it's not always the smartest thing just to automatically choose the cheapest binary out there. Sometimes it might work out for you, sometimes it might not, right? Sometimes you wish you would have taken a little bit lower strike to give yourself some room. So that's one of the biggest things you have to determine there is, what is more important to you? All right, it's important to you to, have a little more insurance and therefore possibly have to put up a little bit more, okay? Or are you looking at that risk to reward? And a lot of that has to do with the expected move of the market, which can sometimes be a tricky thing to figure out. One of the ways that we look at that here, let's just pull this chart back over here. And I want to show you kind of another quick example here. I'm going to pop on another indicator real quick just to show you something that we use quite a bit. It's called the expected range indicator. It's a proprietary apex indicator, and it measures kind of the historical expected moves of the market. Okay, so for example, notice when we were coming up here, as you see here, these are based on 1 hour out. These boxes kind of give the expected move of the next hour out. Okay, so, and I can adjust that time frame. So as the market was popping up here and we were kind of in our range here, our imaginary range, and breaking out, we've already broke past the expected move of the market. The market's already moved higher than it was expected to. So if I'm looking at this, me personally, I'm not really, hey, maybe the markets might take off, but I'm not really expecting huge moves here over the next hour or so, because it's already exceeded its expected move. Okay, so in that case, I might be looking more for a binary that would have been priced or have a strike price that was underneath here somewhere to give me a little bit more insurance, because I don't really expect a huge move to get up there to some of these out of the money binaries. Okay, does that make sense? When you're looking at that expectation, don't take just the cheapest binary you can. Look at what the market and the chart's telling you. If it's already exceeded an expected move, then you might want a little insurance and get a little bit lower strike down in here. Okay, now, for example, let's see here, the market's already moved here, obviously. But when we were looking at it before, if we could have gotten something down in this level here for $65, $70, say, an in-the-money binary that gave us a little bit of protection, I probably would have been looking a little more at that, okay, because I'm not really expecting a much bigger move. Now, what are some of my other options here? Well, we've talked a little bit about binaries. We've also got some options for spreads. So if I thought the market, was breaking out here and still going long, would I be looking more at a binary or spread? Well, if I'm not expecting much of a bigger move here or a big move in the market, possibly spreads might not have been the way that I was wanting to go, because I can potentially make a lot more on a spread if the market moves a lot and if it's a larger spread. But if I'm not expecting much of a bigger move here, I might not have opted for a spread. Okay, I might have opted for that in the money binary to give me a little bit of room here. Okay, now one other thing to consider with spreads, and this is very important here, and what I want to do is let me get rid of this here real quick. I want to show you kind of a different example and something to really keep in mind with spreads. Now let's reverse our imaginary setup here. All right, let's say that the market has popped up here, it's at a level, we see it chopping around, and we've got a breakout to go short. We've got exceeded volume going short. So I want to flip this imaginary around here, saying that we were looking to go short. Okay. Now, let's say that I'm going to change my expected range indicator here. Instead of 60 minutes, I'm going to put it out, say, 240 minutes measurement. All right, to see what is the expected move over the next few hours here. Okay, so actually I need to change that one more time here. Give me just a second. Let me just change this to, let me go a little bit further here. All right, well, even to right there. If we had a short setup here, okay, or let me give you an example. If we had a short setup right here earlier this morning, I don't have a whole lot of room down to the bottom of this expected range here, do I? Okay, right, so I don't have a whole lot of room to the expected. But right up here, let's say that we had a setup to go short. I've got a pretty good distance down to this high to low expectation down here, don't I? So I've got a pretty good distance there that for the rest of the day here, we could have a pretty good move down. So in this particular case, like if I see myself close to the bottom of a range, again, I might be looking at a binary because I don't see a potential, possibility of expected big move. But here, I might see that there's a pretty good expected move going down. So I might be looking at, hey, maybe I want to take a look at some spreads there. Okay, so I want to show you something real quick here. So let's say that I was looking at some spreads. So all right, I've got a potential big move here. And let's just take a quick peek here at this market filter. And let's look at spreads and let's show some results here. Just want to see that. And let's see, we need to go down. Let's just say right there. Okay, so I've got my end of the day spreads here. Okay, well, I've got all kind of different spreads available to me here. So let's say I was looking to go short. Okay, and let's say I'm looking at this particular spread right here. That's 47.40. Okay, to 48.20. All right, and I want to sell. Right, we're looking to go short. Okay, so for one spread, I've got to put up $233, and I've got a max profit of $567. Okay, well, I like that I like that potential reward, right? But I do have to put up $233, right? And that's fine. But I want to show you something here real quick. What I'm going to do is, see here, that was the 47.40 to 48.20. What I'm going to do is I'm going to do a tear off ticket here. Okay. And then what I'm going to do here is look at the 47.60 to 4,800. 47.60 to 4,800. And we're going to do a tear off ticket here real quick. All right, and this is something really important, guys, that you really have to keep in mind when you're looking at spreads. Okay, so on both of these, we're looking to go short, right? So here, I got to put up $222, and I've got a max profit of $578. I like that. Here on this spread, I only have to put up $79. Now, granted, my max profit potential is a little less of $321, okay, but that's still a pretty good move in the market. Now, one thing you've got to keep in mind when it comes to spread premium and pricing, and I'm going to show you and get a little more information on this, you have to be aware of something. This particular spread right here, all right, the indicative is at 48.02. Where are you able to sell this particular spread? At 48.01. Okay, so you can sell that spread up here at 48.01. Okay, so that's a pretty close to at the money spread there. Meaning you get in that spread, you're going to see your P&L moving pretty close to $1 per tick pretty quickly, right? Now, where are you selling this spread at? 47.94. All right, so that spread is down here. Okay. So notice you only have to put up $79 to get in this spread, as opposed to $222 to get in this spread. So some of you might automatically say, oh, I like that spread better because I only want to put up 79 bucks. And that's fine. But what you have to realize is you do have to put up a little bit more for this particular spread here, but you're getting in right at where the market is. It's an at the money spread, near the market spread. Okay? And so you're going to see as the market starts coming down potentially, you're going to see your P&L a little closer to $1 per tick right away. Okay, mimicking the market a little more. This spread here, it cost you a little less to get in, but you didn't get in, you didn't buy into it or sell it until right here. So as the market starts to move this first little bit, you might not see that big move in your P&L. And that's why some of you say, hey, I don't quite understand those spreads, or those spreads didn't quite work out for me. The market moved down, but I didn't see my P&L moving down. You have to pay attention to where you are selling that spread. Okay, so keep that in mind. That's a very important thing to consider, is which spread you're getting into, and to help understand how your P&L is going to move quickly. Now, one key here, let's say that the market is coming down and breaking down. Are you expecting just a quick short move down? Well, if you're not expecting much of a move down, let's say you're only expecting 20, 30, 40 ticks down, well, then you might really want to look at getting into that at the money spread that's going to mimic that market in that quick 20 or 30 ticks down. But what if you're expecting a potentially big move down? Okay, well, if you get into this spread here, you might not, see your P&L moving a whole lot with that first initial move, but if the market's coming way down, then you could see a pretty good move in your P&L there, right? Now, something to consider as well. This first, let's see here, 48.02 down to 47.94. So that's a difference of, what, 6 points and 60 ticks. So that first 60 ticks, or first potential $60 of profit, you're not going to see that right away if you took this spread here. But let's say, for example, that the market went way down. You had a really big move in the market. Okay, well, on this spread you're having to put up $222. On this spread you're only having to put up about $80. So how many of these spreads could you have gotten into? Okay, how many of these spreads could you have gotten into to put up about the same amount that you would put up for one spread here? Does that make sense? So on this particular spread here, let's say the market went down all the way to 47.30. Well, you got in it at 48.01. It went down to 47.30. So you had, what, 70 pips there, just as an example, 70 points. So therefore, 10 to, so it's about 700 pips, 700 bucks, correct? Now on these three spreads here, you wouldn't have got as much in that first kind of $60 move there, right? But on this 47.95 down to 47.30, that's 65 ticks times $1 a tick, 650 bucks. But you had three of them. You see that? So your profit would have been more like 1,800. So you would have given up a little bit in that first initial move of the market there. Does that make sense? But then as the big move is made on down, you'd be at $3 a tick, not just $1 a tick. Does everybody catch that? But again, that would work in your favor with that big expected move. But if it's only a smaller expected move, this particular spread might have been better for you to mimic that market, $1 per tick, in that initial 20, 30, 40, 50 tick move. So these are all things to keep in mind and put together when you're looking at directionally trading the stock indices with Nadex. Is you've got a bunch of different options available to you. You've got intraday binaries, daily binaries, you've got intraday spreads, you've got the end of day spreads. You really got to look at your options there, not just look at the cost to get into a trade, not just risk and reward. You have to look at all of it together to see what kind of works out better there for you. Okay, so that's just a quick run through of some setups that I do look for with the stock indices, and some ways that I compare my different options as far as the binaries move out of the money and in the money, and the same with spreads, at the money, near the market spreads compared to some spreads that are a little further away. Looking at my risk versus reward there, what is my expectation? How many spreads could I get into on this lower one here with a big expectation compared to here? And just several things to look at there. Okay, so I know that was a pretty quick run through there, but just wanted to help open up your eyes to some different things to look at when you're looking at these trade setups in the stock indices, especially with those spreads, looking at the difference of how many you can get into. Now, I know some of you are probably lost here. Some of that might be a little over your head there or a little bit quick. I want to direct you over to Nadex.com here. Go right here to the Learning Center and go to Webinar Archives. I want to show you how, for some of you that might have been, might be new or not really familiar with some of what we're talking about here, or even brand new and not exactly sure how spreads and binaries work. If you go over here to the Learning Center and go to Webinar Archive, filter by presenter, if you go here to find us here at Apex Investing Institute, I want to show you a couple webinars you can go back and watch that will really help kind of piece all this together for you. First of all, I want you to watch last week's webinar. We did Trading Live Forex Markets with Nadex, and I talked quite a bit about these strong deviation levels and the market being pulled to them, and some of the indicators we talked about, and really talked a lot about managing the trade and knowing when to exit. And then right down here, common misconceptions with Nadex spreads. Okay, and that's a very big one you want to check out. I kind of covered a little bit what I showed you there about making sure to pick the right spread and how you're getting into the market at different places and making sure you're choosing the spread that really is going to fit what your expectation of the market is. And for those of you that are brand new and you're really not even sure of the basics of spreads or binaries, that's right here for you. Basics of Nadex spreads, Nadex binaries 101, kind of handhold you through like a 5-year-old, like you've never heard of binaries before, you don't know anything about them. We start from scratch. Okay, so if you're brand new, start with those basics webinars, check out the misconceptions of Nadex spreads, and then check out right here, if you're a binary trader, choosing the right binary for your strategy. All right, those 4 or 5 webinars right there will piece everything together for you, from the basics to choosing the right one to managing and entering trades. And make sure once again to hop on over to Nadex.com and get your free demo account through Nadex, and then check us out over at apexinvesting.com. Feel free to ask any questions you might have about today's webinar or anything you might have seen. We've got a ton of free education over there, some step-by-step training courses about binaries and spreads, different ways you can use them. We get you those deviation levels for free. You can put them right on your chart. You can mark them right on the, I know what some people do, which is great, is they take those free deviation levels we give, and they'll pop them right on to the Nadex price ladder charts. Really helps them see exactly what strikes would be best for them to use. Okay, so all right guys, thank you for joining us here. I'll let you get back to your trading day. We look forward to seeing you on our next webinar. Any questions you might have, feel free to let us know, and thank you so much for your time. And this webinar recording should be up here in the archives in just a couple of days if you want to check it out again. So thank you so much, guys. Have a great afternoon.